Welcome to this special edition of the Sponsor Spotlight. I'm your host, John Sirenitas, and this morning I'm joined by Herb Devine of Mortgage Right. Mortgage Right has been one of our top sponsors. They've been our top sponsor for the last 2 years, and Herb is also the head football coach at Scituate High School. Coach Devine, first things first, happy St. Patrick's Day, I should say. It's early. Great to see you, my friend.
Yeah, good to see you too. Happy St. Patrick's Day, and thanks for having me on.
No, hey, I appreciate the time, man. I know today's a busy day, of course, and we're getting into the spring market here. It's March 17th. This has traditionally been the busiest time of the year in real estate. It's the time of the year where most people are entering the market to buy properties. They want to buy now so that they could get settled in going into the summer, and then if they have kids, their kids could start in that new district that they moved to in the fall. Just some early thoughts on rates and where you think the market is currently. Obviously, rates have been a source of contention the last couple of years. Where do you think the market is currently as we speak to you this morning, Herb?
Yeah, I mean, with regard to rates first, where I'm at, we haven't gotten much change since the Fed, the some of the reports came out last week and even this week, with inflation not as under control as they wanted it to be, kept rates up a little bit. We're still in that 6.75, 6.875 ballpark. Haven't got that first, once that first rate cut comes, which they're projecting now, maybe June, or maybe that, really third quarter is where we could be. But what I'm seeing is, we've had a couple of busy weekends with pre-approvals. I think what I'm feeling from most of my agents and most of the clients, we probably have 60 to 80 people pre-approved, but the problem is inventory. The big word is there's not a lot of houses on the market. There's the people that have 2.75, 3% that we talk about that they haven't really been willing to sell. And then you have a lot of people that, just aren't ready to put their houses on the market. We're seeing, different locations are busier than others. I think in certain locations, like even in the city, I think things are happening. There's a little bit more activity with multifamilies, and there's way people now, those DSCR loans where you just qualify based on rental income. As long as the cash flow is good, you qualify. You don't have to really verify income. So we're seeing more activity in that market, but people buying multifamilies because obviously rents are up. But we need some more buyers, and I think a couple of click downs with the interest rates will help that. But there is activity. I mean, people are doing things, and people are buying, people are still selling, people are moving, people are taking equity out of their homes. So there is activity. It's just not at the level that probably most of us are used to.
And I think this is important because I'm in the business as well. I've been a licensed realtor since 2016. I'm licensed in Massachusetts and Rhode Island. I think the key word you said there, though, Herb, is inventory. And inventory has been a problem the last 3 years in particular. And I think the thought process was, and you can correct me if I'm wrong, but I think the thought process was when rates went up, part of that was due to inflation. The Fed wanted to curb inflation and try to get it under control. But part of the reason, too, was to level the playing field in the market so that you can weed out some of the not serious buyers, if you will. You can focus solely on the serious buyers that are ready to buy, and you can create a level playing field. That hasn't happened. And it hasn't happened because, as you mentioned, part of the other problem here is that if you're a seller and your interest rate, let's say, is 2.5, 2.75, 3, you're not going to give up that rate to sell, move into your next home, and now you're paying 6.75 interest. It doesn't make sense on that side. So I think the thought process was it would level things out, but it hasn't, because it's actually created the opposite effect, less inventory.
Yeah, I think that's the issue right now, is those homeowners that maybe want to sell, maybe they want to downsize, maybe they need to upgrade their home. They're just choosing to stay on the sidelines right now because of rates. It's just tricky to go from, and I've had a lot of people that are interested in selling, but even to them, it's like, well, where am I going to go? So the problem is, if they do sell, the inventory is so low. Plus, if you look at some of the rental, the rents that are out there, there's a lot of people that you'd be paying $4,000 to $5,000 a month. I mean, I see some people, what they're paying for rent right now, then they get locked in. They get locked in for 12 months, and landlords and the management companies that are controlling these rents aren't letting people out early, where, when it was a little bit different, the market, you could get out of your rental agreements. And I think that's kind of the fear factor right now is, if I sell, where do I go? Do I rent? There's no inventory. And the problem is, as you know, as a realtor, if somebody comes to you with a pre-approval that says, well, I got to sell my house first
Right.
before I buy this,
That's
they're
tough.
not even, they're in another pile in the trash. Like, that pre-approval is pretty much worthless in this market right now. So you're right. It is, there's a lot of factors that are against people right now that own homes that want to sell. They have to use that equity to buy a home. It's tricky. You got to go in with a pre-approval that says that you can still qualify without the sale of your home. And not everybody can do that.
Herb, I get this question a lot. People that know I do real estate ask me this question at work and whatnot. In terms of the rates, I don't know if we're ever going to see them in the twos again or anytime soon. Do you ever see us getting back to where we were pre-COVID or even after COVID before inflation hit?
I don't see the rates going to the levels they were. I don't. I think a 2.75, a 3.25 interest rate, that's long gone. Those rates are probably never going to come back. I would say if we can get rates into the 5.5, 4.75.
That's the Fed calling you right now.
Yeah, that's probably my daughter. Somebody needs a ride somewhere. It's probably, I think if we can get into the mid fives to the high fives, I think you're going to see a lot more activity. The other thing about rates right now is it's been almost 18 months, almost 2 years where, the 2 year, I'd say it was 2022 is when we really started to kind of spike up. But I think people are used to the rates now. So it's not as much of a shock to people that have been looking for the last 12 months. We're in a normal high market, high interest rate market right now. So those rates they've been at this level again, probably for the last 12 months. So I think people get it now. They know what they're going to spend. They know they can always refinance when the rates do come down. We tell the same, like, if you love a house, go get it if you can. And then rates will eventually come down. We can always refinance you, pay you closing costs for a refinance. But I definitely think that, the interest rate market right now we need a little break. And once that happens, you're going to start to see more activity.
So in essence, what you're saying here is you don't even really see a scenario where they're going to drop into the fours.
I personally don't think that's going to happen.
I've been saying the same thing for what it's worth.
Yeah, I mean, I think if we got back into the 5.25, 5.75, that's going to probably spike a good amount of activity. Refinance activity will happen. People will be pulling equity out of their homes just because, property values right now are in Massachusetts are way up. I mean, we went up another 10% last year. So it's, people have equity. It's, and then the other part is people are taking out home equity line of credits, and those are, those interest rates are 8 or 9%. And as those rates adjust on people, they're going to want to not pay that and get themselves back down. So there's going to be activity, but it's a rate driven kind of business sometimes. And that's right now where the level of activity has slowed down a little bit just because of the higher rates that we've been at.
Yeah, and I think that's, you made a great point about home values. And while that's a good thing if you're a current owner and you're thinking about selling, it's not a good thing on the buy side in a lot of ways, because it means now that you need to show more income, you need to bring more to the table in terms of your down payment. Then you factor the higher rates. It's continuing to put a squeeze on buyers. And then to add to all of this is the recent lawsuit that was settled with NAR and various state agencies in regards to buyer representation, which I think is going to make things a little bit more difficult here now. And, I know my office and our broker, we had a meeting about this at the end of last year, kind of preparing for this and how we're going to deal with buyers. and what our approach is going to be. And I think that that's going to complicate things even more. So it's already a difficult market between rates, a lack of inventory, rising home prices, and then you factor into all that now that the buyer agent relationship is going to change now, and that's going to affect the market as well.
Yeah, I mean, I was honestly, my phone was blowing up this morning with all the Instagram and everybody making a video that's a realtor about the NRA settlement, and to me, it's like, all right, this is kind of a simple fix. The seller has always paid the commission, right? So they've always paid, let's say it's 5%, and for the most part, it's funny. I saw one article that talked about 42% of people didn't realize that they, as a seller, paid the buyer's commission. So to me, it's like, well, we could easily, if you can't disclose on an MLS report that you're paying a buyer's agent 2% real estate commission, I don't understand why you can't just have a listing agent. It's just explain that, like, you could do a seller concession. You could do a seller concession, which is typically, if you're paying 5% real estate commission anyways, why not pay your listing agent the 2.5%, and then you just put in there that you're going to give a seller concession for 2.5%. So there's ways around this. I just think what's going to happen is the buyer's agent conversation has to happen now. So
it's
the
going to get much harder.
Conversation, it's like commercial real estate. If you do a commercial real estate loan, and we do commercial stuff, and we have to have the buyer sign an agreement what the commission is. It's the same thing with now the buyer's agent's going to say, look, I'll bring you to these 10 properties this weekend, but I need you to sign something up front that you're going to pay me 2.5% or 2% or 3%, whatever that commission is. And then maybe the buyer is going to negotiate that with the seller's agent. So it's just going to be a little bit more work, probably a lot more work for a buyer's representation than there has been in the past. But the seller, or I should say the buyer, is still going to pay that commission for the most part. It's just going to be, is a seller going to say, you know what, I'm only going to pay you, to the listing agent?
I don't want to hijack the show because it is about mortgage right and you, but I do think you mentioned this just now, and I agree wholeheartedly. It's going to make it a lot harder. And I think what it's going to do is, one, I think it is going to squeeze out some of the excess agents that are in the business. But I think the other thing it's going to create now is, because here's the problem I think you're going to run into. A lot of broker offices are going to tell you, okay, if you're going to have this conversation with your prospective buyers, you're going to have to place a value on your services. So in other words, if there is no buyer agent compensation offered, now you're going to have a very difficult conversation with your buyers where you're going to say, look, my broker thinks that the service that I offer and that our agency offers is worth this. If they can't afford to pay you, let's say 5%, and then I'm only using that as a number. If they can't afford to pay you 5% of the total cost of the house, or something to that effect,
yep.
I just think, to me, what's gonna happen is two things. One, they're gonna start shopping around for agents. Two, you're gonna see a lot of buyer agents that are gonna basically say, no, I'll do it for 1 or 2%. And three, what I think is gonna happen is they're gonna go to the seller agent and they're gonna say, look, we'll give you the 2%. Can you write the offer for us? Which I think is a bad idea. It's an awful idea, because the seller agent's fiduciary responsibility is to the seller. In other words, if the property you're buying takes in water in the basement, even if they do your paperwork and represent you, they're not obligated to tell you that now. They're not.
Right.
And so I think it's a bad idea. And what it's going to do is, I think it depends on who you talk to. I've had agents downplay it and brokers downplay it with me and say, it should have always been that way. It's going to be fine. It'll just take some getting used to. And then I've had other brokers and agents say to me, this is bad for our business now. A lot of agents are going to have to either pick up another job or get out of the business completely now, because they're predominantly buyer agents. So, to your point, Herb, it's going to change the conversation now. When you sit down with a prospective buyer, it's going to be a part of that conversation, whereas before it wasn't.
Right.
But now it will. The reason I think it's bad for business ultimately is, I do think it's going to squeeze buyers out of the market. and it's going to make it harder for, especially for young people, first-time home buyers. It's going to make it harder for them to buy a house because those are the people that need representation more than anyone else. If you've done this 2 or 3 times and you're moving into your third house, maybe you could finagle it somehow. You could
Right.
work that out. But if you're a young home buyer or prospective home buyer, I think it's going to be hard. You need agent representation. You need someone on your side. But if that agent's broker is saying, hey, listen, you need to place value on your services, we're not taking 2 or 2.5%, then I think that that's going to create a real problem because now that's additional funds that these people need to come up with to pay you for your services. So
Right.
I think it's bad.
Yeah, I do. I agree. I think it's going to cause a lot of confusion. There's going to be a lot of I mean, think about it. If I'm just as you're talking, I'm just thinking about realtors that I know that are buyers agents.
Mm-hmm.
And so instead of just making a bunch of appointments to go look at houses, say you want to take a first time home buyer to 7 or 8 houses this weekend, what are you going to do now? Do you have to go into each MLS listing to see what the agent is going to list?
Yeah.
Am I going to get paid to bring you to this property? What's the agreement going to be? So the amount of work that a buyer's agent's got to do right now just to even show people homes, it's definitely going to be tricky, and it's going to be probably more uncomfortable conversations that people are going to have about that commission piece that they haven't had in the past. So I agree with you.
And there's scripts already. Some brokers are doing scripts on how to approach the sell side to try to barter with them in good faith to get them to get the seller to concede to, like you mentioned, to get them to concede to pay the commission. But I think you might see a lot of that now. And I think you're going to still see a lot of sellers offering commission to buyer agents. But I do think that as we go along here, if you go on MLS on a day-to-day basis, I think you're going to see less and less of it because ultimately then they don't need to do it now. So what's the incentive? And I think you're going to see less and less of it when the market turns. Once we do see lower rates, once we do see more of a buyer demand, I do think you're going to see less and less sellers offering it, and you're going to see less and less of it on MLS. I will say this, though. I think that if there's a silver lining here, whenever I've worked with a buyer, I've always had that first meeting, and I've sat down with them, and I've talked to them about where do they want to live, what do they want to spend, what are they looking for in terms of a home. I think now you do that as a buyer agent, but you add that component of it to the conversation. Say, guys, look, in order for me to work with you, it's going to cost you 3% for me to work with you. You know what I mean? And or whatever your number is. I think the problem is for me, I don't mind doing it for what the standard is in the industry, the 2.5%. But I think a lot of brokers are going to have a problem with that.
Yeah.
A lot of brokers are going to have a problem with that on the buy side. They're going to want more. And the problem is, I've had brokers tell me that I'm telling my buyer agents to talk 5 to 10%. I'm like, 5 to 10%? Are you out of your mind? Where are they going to come up with that money?
Right.
No offense, but our service is vital. It's important, but it's not. I don't know if it's worth 10%, but that remains to be seen. You are watching the Sponsor Spotlight. I'm your host, John Sirenitas, and this week's Sponsor Spotlight is Herb Devine from Mortgage Right, our number one sponsor. And Herb, we can't thank you guys enough for what you do for us with your sponsorship, your partnership. You are a tremendous partner, and we couldn't be more thankful to be partnered with you guys. I want to shift the conversation here because I think it's important. I say this every week when I mention you guys on the New England Football Show. You sponsor the New England Football Show. The importance of experience. Talk about your experience and why that matters in a market like this.
Yeah, I mean, I would agree with you. I mean, it's experience is like anything. Like as a coach, you've seen different what opponents do. Same thing in the mortgage business. I've seen so many scenarios that clients have. So to see different scenarios where you think somebody can't qualify, but there's ways to qualify people now, helping people with their credit scores. Like we just don't run someone's credit and say, oh, your score's too low. Sorry, we can't help you. There's so many things that we can do to help that borrower get their credit scores up. So that comes with experience. I've been doing this, my company's obviously been great, and I've been doing this a long time. So every scenario, every client's scenario is completely different, and that is important in this market. I mean, in this market where you need to qualify. I mean, what I do to qualify people, it's math. Like, I'm doing the math. How can I show that you have this income? But if you don't have enough income, maybe we can do a bank statement deal because you have deposits coming in, or maybe you can do you're buying an investment property where you have rental income. There's so many scenarios out there, and I think experience and having a team of experienced people. I've been doing this 27 years. We've seen it all, and I think that's what helps agents. That's what helps our financial planners, our accountants, our past clients, our new clients. It's important to know that you can look at someone's picture and figure out a way to get things done.
And one of the things that I think is so important to our partnership is the football piece, because we're both football coaches. We're both in the industry. One of the things that I think is important too is that if you are a teacher, a coach, an AD, an administrator, if you're looking to buy your first home or buy your next home and sell your current home, it's important to work with people that you can relate to. This is the ultimate relationship business. I say it all the time, Herb. If you're going to get into real estate as in any capacity, you need to be someone who can build relationships. If you're going to use people in the industry to help you in the process, relationships matter. You don't just want to pick anybody. For those out there that are in the industry, into the education or coaching fields, talk to them a little bit about why that's important, because that to me is at the core of our partnership, is getting coaches, teachers, ADs, administrators to value that and use people that they can relate to, that they can trust.
I agree. I mean, John, that's such a big point. And I think my relationships with realtors, with clients, with you guys have been built over the years. And to me, maybe it's been the last 24 months, the last 18 months, but I've seen that change a little bit in our market, and where I have some, maybe some past realtor clients that they kind of fall in love with, hey, this local bank can give these people a little bit lower rate than you can. Well, what happens if the credit scores drop or they can't qualify? To me, relationships matter, and doing business with people that A, you trust, B, that can get it done and they've gotten it done in the past. That's important. I mean, our whole business, my relationships with closing attorneys, with financial planners, with accountants, I can pick up the phone and make a phone call for somebody, for a client that's in process, talk to them about, hey, I'm selling an investment property. I got a 1031 exchange question, or I need a closing attorney to help put this into a trust for this client. Those relationships matter. So you're not just getting me, you're getting all the people that I've built relationships with over the years that are going to help the client. They're going to help whether it's a teacher or a coach or an administrator or whoever it is. We have a whole team of people that we have relationships with that are going to help our clients out. And like you said, relationships in this business, if we didn't have them, we wouldn't do business the way we do. And that is most important to me, is not even like, I love people that call me up and say, hey, we're thinking of buying a vehicle. Who should we do our financing with? Or, hey, we need a plumber. Who do you know? Like, I like it when people call me, because I have good relationships with not just people in the financial sector, but also like landscapers and plumbers and electricians and anything that's going to help clients, feel better about the buying process, or at least give them like, hey, make a couple of calls, call this one and call this one. I think those relationships that we've built over the years are so important.
So teachers, coaches, athletic directors, administrators out there, if you're watching this, I can't strongly recommend Herb enough. And I've known Herb. It's not just because we're partners. I know the kind of person he is. I know the business. I know his reputation. I would be recommending him to you even if we weren't doing this right now. So that relatability is so important. With that said, Herb, what are some programs that are out there? What are some ways, especially if we're talking to young teachers, young coaches that want to buy, whether it be a condo, a single family, a two-family, whatever the case might be, what are some programs out there that can help our young teachers, coaches, athletic directors get into a home?
Yeah, I mean, most programs right now, I know we got conventional deals with 3% down. If you're a veteran, we can do 100% financing. There's FHA loans. If you have a little bit lower credit score, FHA is a good program. The rates are a little bit better right now than conventional, and their PMI has also come down. So 3.5% down, 3% down. There's Mass Housing. They can do 100% financing. That's a good program. So everybody's scenario is a little different, and I think that's where if I can kind of look under the hood a little bit to help clients out, to if you are a first-time home buyer, I've done so many teachers, on the South Shore that I've helped out with purchases and refis, and just because I'm in the building sometimes and I can help out, and people have access to my email and my business. But I think there's just so many different programs out there now. Buying condos, you can buy condos with 3% down, single family homes with 3% down. You can get gifts if you have parents that are willing to help you out with a gift for that 3% down. Those programs are available. So there's just so many things we can do. And I mentioned, what I've been doing a lot of is people that have been in homes that maybe want to take some of that equity out. I've had a bunch of clients this year use some of the equity from their home to buy investment properties where they're getting, $6,000 or $7,000 to $8,000 a month in rental income on a 2-family or a 3-family. And then what they're doing is, say the mortgage payment's only $4,000 or $5,000, they're cash flowing $3,000 a month. And that's a way for people to invest in some of the equity that they've built up over the years. That's a great program. It's called the DSCR program, and it's just cash flow. If the property can cash flow, mortgage payment, the rental income is more than the mortgage payment, you qualify. I don't even have to deal with tax returns and W-2s and pay stubs and VOEs. It's a really easy program that people are taking advantage of.
And they don't even necessarily need to come to the office for you to work with them. I mean, it can all be done online now,
Yep.
virtually. There's no reason to even meet in person, really, if you think about it.
No, you don't need to meet me if you do not need to. So I have a mortgage app on my phone that I text to people, and that app they download. You can actually play with a mortgage calculator. You can do your application right on the app. You can take a picture of your pay stubs, W-2s, driver's license. Everything can be done. You can sign all the disclosures on your phone. You can be anywhere and close a loan. You never even have to open up a laptop anymore. Everything is so easy. And it gives the client instant access. If they're at a property and they want to get pre-approved, I can do it right from their phone, and I can do it right from my phone, the pre-approval. So the process, the technology that we have, I mean, if you don't want to meet me, you don't have to.
But I strongly recommend meeting him if you can. He's
come on down to the office.
Talk to.
I'll meet anybody, but it seems like 95% of the deals right now we do, I might say hello to people at a closing, and that's the first time I meet them because it's just so much easier to do it, with the technology nowadays.
And finally, Herb, how can folks in general get in touch with you, including teachers, coaches, ADs, administrators?
Yeah, you can. My email is herb@mortgageright.com, RIGHT.com. You can text me. My cell number is 781-254-2846. You can text me. You can call me. We've been using the website situate.mortgageright.com. That's another avenue. That's where our application is. If anybody wants to get pre-approved or apply to do anything, we can do home equity lines of credit, second homes, investment properties. I'm licensed in about 25 states down the East Coast, North Carolina, South Carolina, Florida, Texas, Georgia. If you want to get out of New England, sell your house and go buy something down south, I can help you there. If you want to buy a second home, we can help you. We're everywhere when it comes to licensing. So that's the best way to get in touch with me. My cell phone, if you want to, I think if you call or text, that's probably the easiest way to get in touch with me too.
Well, Herb, I say it all the time. I genuinely believe you are the best in the business, if not one of the best in the business. 27 years of experience matters, especially in a market like the one we're in now. So again, I can't stress it enough. Anyone out there that's watching this, if you're currently entertaining entering the market, whether it be as a seller or a buyer, and you need someone with experience to work with you to get you pre-approved, to get you in a program that works for you, Herb's a guy. I can't stress it enough. And I want to say thank you for taking the time, my friend. It's always great to see you. And let's do this again in August.
Sounds good to me. Talk a little football.
Yeah, yeah, we'll blend in a little football as well when we do that. But again, this is Herb Devine from Mortgage Right. That is it for this week's sponsor spotlight. For Herb Devine, I'm John Serenitas. Until next time, peace.